The Australian dollar has been volatile this week, but has ended up mostly lower after global jitters have increased. On Tuesday, the RBA statement held mixed fortunes for the Aussie dollar. The RBA's steady cash rate at 2% was a positive, along with its cautious optimism on growth in the second half of the year. But on the negative side for the Australian dollar, there was new commentary on the currency itself. The Reserve Bank noted the rise in the Australian dollar over the past month. It did concede that some of this was justified in terms of higher commodity prices, but it said that an appreciating exchange rate would, quote, complicate the adjustment of the economy from the fall in mining investment. Westpac continues to expect their Reserve Bank to keep the cash rate at 2% for the rest of the year, though we do note the chances of a rate cut have increased. Market pricing is now 40% chance of a May rate cut, and that rises to 100% by September or October. However, some of this increase in market pricing for another RBA rate cut is due to global factors. Later in the week, we saw an increased focus on Japan, and in particular, the surge in the Japanese yen. The Japanese yen is now the strongest currency in the world this year, up more than 10%. This doesn't seem to have too much to do with the latest economic developments in Japan. Rather, it seems to be an indication that Japanese investors are losing confidence in investing abroad. Obviously, that has negative implications for currencies, including the Australian dollar. So if the Japanese yen isn't able to stabilise in the week ahead, there may be further pressure on the Australian dollar. But there's also a lot to watch domestically. We have Australian business confidence and consumer sentiment readings out on Tuesday and Wednesday, and then the highlight of the week, the March jobs numbers. Australia saw very strong job creation in October and November last year, but the readings over the summer were quite soft, with employment actually falling slightly over the 3 months. The unemployment rate was 5.8% in February. There is a risk that this does tick higher towards 6% in the coming release, even though the jobs number itself might pick up a little bit. This would have mixed implications for the Australian dollar, but a soft number would certainly add to the case for the RBA to cut rates again sometime this year and would obviously pressure the Aussie. Then on Friday, we'll see China's Q1 GDP report. For all the concerns over the Chinese economy over the past few months, the numbers are expected to show only a slight deceleration in growth to about 6.7% year over year. Whether that's enough to calm concerns over China, we will see. But it's obviously something that Australian dollar traders will be watching closely. If the global worries over the Japanese yen continue in the week ahead, then perhaps the Aussie could dip towards the 74-cent level. But overall, we remain reasonably optimistic on the Aussie dollar over the next few weeks, seeing it heading back towards about the 77-cent mark over 1 month. We'll speak to you next week.